Duolingo released their Q3 earnings, and right after earnings, the stock deep dived 20%. There is now a very high chance that we could see Duolingo fall below the $200 level. Welcome back to the Value Investor Show. Today, I'll talk about Duolingo, the stock performance, Q3 earnings, what exactly happened and why, the company's fundamentals, my overall thoughts for the earnings call, what might happen next, and the intrinsic value of the business, as well as whether I'm buying or selling. Now, this is what happened in Q2 3 months ago. The stock gained 30% after posting earnings 3 months ago. They beat estimates just like yesterday, and yet they lost all their gains within the same few days. Yesterday, something similar happened. Duolingo posted their Q3 earnings. They double beat estimates, and yet the stock deep dived heavily after hours. At one point, it was down over 20% and very close to the sub $200 levels. But why did this happen? If Duolingo crushed earnings, if their numbers were spectacular, then why did the stock dive that much after hours? Let's look into the earnings in more detail. First, Duolingo beat their earnings per share by quite a lot. They also beat revenue expectations by 4%. Year-to-date revenue is up 41%, which is very impressive, and EPS is up 1,000% year over year. And we will dive into exactly why this number is so inflated. But overall, these numbers showcase a very strong quarter for the company. Now, Duolingo has some key indicators that are very important to track, and that is daily active users, monthly active users, and paid subscribers. Their daily active users were up 36% year over year. Monthly active users were up 20% year over year, showing that conversion from monthly to daily is now much higher than last year. Paid subscribers were also up impressively by 34%. And as you guys can see, paid subscriber penetration increased from 2.5% to 9%, showcasing exactly that active users are converting into paying users at a higher rate. Now, margins also improved significantly. EBITDA margins improved from 25% to almost 30%. So all in all, the highlights are quite impressive. Strong growth, improved monetization, and even growth among active users, which is one of the key points bears often highlight. However, year over year growth is slowing down. Here you can see the daily active users, monthly active users, and paid subscribers. And yes, in absolute terms, everything is growing. But if we compare it from last quarter and current quarter, as you guys can see in the lines right here, the growth is actually slowing down. This slowing growth might be spooking Wall Street, because even though Duolingo is expanding into new verticals, the slowdown in active user growth could make investors cautious. But if we look at things from a balance sheet perspective, Duolingo is extremely healthy. They have no debt, they have 1 billion in cash, and they have been growing shareholders' equity extremely well. Gross margins are outstanding. Revenue and income and EPS growth have also been spectacular over the last few years. Return of invested equity, free cash flow is also very strong, as well as the company has no debt. So overall, this is a very healthy balance sheet. Now, if you look at the income statement, EPS is extremely high this quarter due to a one-off benefit from income taxes. If we remove this tax benefit, the real diluted EPS would be around $1.05, assuming tax provision was zero, which will still be 100% increase in EPS, which would also be enormously impressive. And also remember, as I said earlier in the video, Wall Street expected around $0.75 in EPS this quarter. So even without that provision from income taxes, that would essentially beat Wall Street estimates. But overall, my take is that this has been an extremely strong quarter by Duolingo. So if everything is great, then why did the stock drop this much? I think the drop stems from something management said in the earnings call, specifically in this paragraph. In Q3, we decided to shift the balance towards longer-term initiatives. In particular, we're investing proportionally more in teaching better, and we are prioritizing user growth over monetization in the A/B tests that get launched. This shift is reflected in our full year guidance. We are doing this now because we want to keep growing users for a long time and because of our increasing conviction that AI can fundamentally change what's possible in how we teach. Basically, Wall Street may be concerned that there could be a monetization slowdown as the company prioritizes growth. This is also reflected in the guidance that they provided. Because Duolingo provided 77 million in EBITDA guide versus 80 million, which was the expectation. Even though they increased the revenue guidance and booking guidance, this decrease in earnings probably worried investors. And I think that's the main reason behind the massive drop, aside from broader market dynamics, because most of the companies that reported yesterday, regardless if they beat expectations or not, had a massive drop. But as far as the income statement and earnings call from Duolingo, this could be one of the logical reasons why Wall Street may have been cautious and oversold this stock. Now, in terms of growth drivers, I see three main areas. The first one is expansion beyond language learning, which they are already doing. New subjects like math, music, and chess are growing rapidly and could attract new users and accelerate growth and increase engagements. And I think this is one of the strategies that the company has to provide a comprehensive educational platform for all subjects that require long-term learning and could drive further monetization. The second one is around AI-driven content. Leveraging AI to automate content creation allows faster and cheaper production of learning materials, but also more customized materials for the end user. The third opportunity is new markets and subscription tiers. Making subscription tiers makes it more affordable for markets like India, which can increase subscription rates, especially among English learners. But while there's plenty of room for the company to grow, there are key challenges that remain, and that is execution and competition. Duolingo faces intense competition. As you can see, there are many language learning apps in the market, and this is not even the full list. And on top of that, AI players like OpenAI and others are launching interactive learning experiences, meaning Duolingo isn't just competing with apps that have high churn rates, but also with LLMs like Gemini, Perplexity, and ChatGPT entering this space. Many argue that Duolingo has the data and technology advantage to leverage AI faster than anyone else, and that's a fair point, but it's still something to keep in mind. In terms of consensus, analysts have kept their position quite similar over the last 3 months. Back in August, most analysts rated Duolingo as a buy or outperform, while some targets going as high as $600. Now, with more recent sell pressure, the lowest 12-month consensus is $220, which is still higher than the current $200 market price. And finally, in terms of intrinsic value, I've put together 3 valuation cases, and here I have the base case in which I'm assuming 25% revenue growth and 29% net income and free cash flow growth with a P ratio of 30, which basically assumes that the profit margins continue to expand in the coming years. Net income basically quadruples almost over the next 3-4 years, and revenue triples over the next 5 years. Free cash flow as well is subject to triple over the next 3 years. And under my base case, with the DCF method, the intrinsic value comes at $252, and with the EPS method at $919. So it gives me a massive margin of safety with the EPS method, but with the DCF method, even at the current price of $210, the margin of safety sits at just 17%, which is still quite high, especially for a growth company like Duolingo. In terms of the bear case scenario, with the DCF method, the intrinsic value sits at $183, and with the EPS method at $640. So even at the bear case scenario, which there's still massive growth, by the way, I still see quite a lot of margin of safety with the EPS method, but no margin of safety with the DCF method whatsoever. Now, in the case of a bull case scenario, with the DCF method, the intrinsic value is still $365, but with the EPS method is $1,300. So in a bull case scenario where the company re-accelerates growth both in revenue and net income over the next 5 years, there could be massive upside with a huge margin of safety. So in terms of my final thoughts, Duolingo is now looking very attractive in terms of valuation. I have used Duolingo before. Within days, I have quitted. For me, there's some risks that are hard to ignore, like competition as well as mobile apps being very cyclical. One day you like the app, the next day you don't. However, I do see upside, so I'm considering of buying. I will update you guys on whether I bought on X, so follow me there if you want to know. Thank you so much for watching, and I'll see you in the next one.